You're listening to The Weekly Edge, your straight-talking guide from industry experts on what's really moving the fixed income markets, here in Australia and around the globe. Brought to you by Gilt Investments. The Weekly Edge is your go-to podcast for sharp, actionable insights into the forces driving bond markets. Each week, your hosts Alistair Healy and Richard Brennan take you on a fun and insightful romp through the financial markets. With their no-nonsense style and deep experience, they help you cut through the noise. Alistair's deep market smarts and Rich's trend-driven mindset make for the kind of conversation that keeps investors sharp, and always one step ahead. Quick hits, smart takes, real perspective. Let's dive in.
G'day, and welcome back to the Weekly Edge. It's Thursday, the 24th of April, and if last week was a tremor, this one was a tectonic shift. Currencies are swinging, markets are stuttering, gold just smashed another all-time high, and bond markets, well, they're acting more like crypto, volatile, unpredictable, and just a little unhinged.
Yeah, good morning, Richo. I guess you're right there with your question. It has been pretty volatile, but at the end of the day, uncertainty breeds volatility. Right now, there's no way anybody in the market's going to know where any of this is going. So if you're managing funds, if you're running a country, if you're running a company, until it all settles down, you've got no way of knowing. So it is definitely going to be a scramble regardless, because people are shifting. Well, there's two reasons. They're shifting their money around to protect themselves, trying to avoid the risk that might pop up, and they can't see where the risk is because it's hidden really until it hits you in the face. And the other thing, I guess, is fund managers. We've created this humongous beast of money that just flows around the world looking for a return. So when you got volatility, that's when the market, starts to look for good opportunities. So if you look at the markets just in the last week, the Aussie dollar's gone from 63 cents to down to 59 cents and back up to 64 cents. 2-year bonds in Australia have gone from 376 to 339, then to 321. So they've actually gone down appropriately. The 10-year bond's the surprise one. It went from 441 to 421, then back to 425. So, the yield curve's come down, but it's just popped up a little bit in the long end, which basically means if you've got a normal yield curve, then the market is telling you and I that they're not so convinced with inflation going down the track. And then you look at gold; it's gone from 3,148, then at 3,000, just a bit above 3,000, and ended up, I guess, the end of the week at 3,392. So that is, both those things. The market looking for protection, so the dollar's gone up, but also opportunities are opening up everywhere. The yield curve's going steeper, but just 10-year bonds in their own right are moving around. They're providing opportunities. And so the 2 years, if you'd gone long into 2 years last week and you'd be looking at capital gains right now, at the same time, the 10-year bonds have done the same. They've gone down but come back up. So lots of opportunities.
But Al, the headlines aren't letting up. We've got trade reroutes that sound like spy thrillers. We've got LNG mega deals shaking up energy flows, a bond sell-off.
Yeah, I know the headlines are saying that, and I guess some of this commentary is coming from the headlines. But in reality, you've got to get away from the headlines and actually look at the markets and look what's actually going on. It's nowhere near that dramatic. I've seen worse for sure. I've seen 10-year bonds move up by 1%, within a week about 15 years ago. So volatility is not something that's new. When Bob Hawke got in, cash rate in Australia was 200% before he got in. The week before he got in, the very next week it dropped to 0.25%. So volatility is not new. It just really comes when suddenly people don't know what the direction is and they're uncertain of what the hell's going on and they're trying to avoid risk. And the other side is looking for opportunities. So
I think that's the issue. It's this volatility, the whipsaw associated with decisions that are retracted the very next day. You get these massive whipsaws, which for any investor that's looking for trend or any investor that's looking at an overall direction for the economy, it's very difficult in that particular volatile whipsaw environment to actually come out with any conclusive Um, No idea. It's a bit like the world's gone bipolar. We've got two worlds now operating, and how you trade or how you invest, it reflects this bipolar nature of the world.
How's the world gone bipolar?
Well, we've got bipolarism in the America, with two Americas. We've got those that want a reinvention of America, and those that want to retain or restore America to what it was. We've got it in Europe, Brexit. We've got it in all of the countries. We've got it in Australia here. It's around the world. This sort of bipolar cultural narrative, which is making investment quite difficult in identifying what direction the world economy is going to go.
Yeah, well, to me, it's always been there. You always got differences. Every country, like Australia's got Liberals and Labor. That's bipolar. It's been like that since, Adam and Eve. So for me, that's what adds to the volatility. That's what makes the market, because everyone's got a different view of what's going to happen, and then the market will reflect what everyone's thinking. So the majority view will be the one that will be reflective, that you'll be able to take advantage of.
Yeah, so let's kick off with the latest plot twist in the global trade war saga, how China is outplaying tariffs with what some are calling economic jiu-jitsu. So here's a headline. China's not just reacting to tariffs, they're outmaneuvering them. Enter the shadowy world of grey trade, where products are built in China, partially disassembled, shipped to Vietnam, Malaysia, or Mexico, repackaged, relabeled, and voila, suddenly they're made in Vietnam.
For me, it's like, something that you teach your kids. We've all got kids, and you say to your kids, treat people the way you want to be treated. The whole reason why we have the World Trade Organization is to set rules that we all need to abide by and stick to those rules so it's fair for everybody. If you don't stick to those rules and you play between the lines, then you're going to end up with, you will the ref will get hold of you and send you off the paddock, sort of thing. You can't you can't keep breaking the rules and doing things that are against what the rules stand for, and then not expect the world to react to it.
But haven't the rules already been broken by Trump breaking those rules?
Well, the tariffs, every country's got its right to put tariffs on. It's their prerogative. Within America itself, he's probably broken the rules, but in his mind, he hasn't, because he's enacted some other acts that he's allowed to, that's giving him the ability to do that. What I'm talking about is the World Trade Organization, where you've got, if a country sends its manufacturing. I mean, China, the last week, has been saying to everyone, don't negotiate trade deals with America at our expense. Meanwhile, it then goes and sends hides its manufacturing, or sends manufacturing to Vietnam, gets Vietnam to assemble whatever it's assembling, and then put the badge on there that it's been made in Vietnam, so that it can avoid tariffs when it goes to America. So in other words, China and Vietnam are negotiating trade deals at the expense of the US. So there's a huge hypocrisy there, and the World Trade is trying to stamp all that sort of stuff out. So in a lot of respects, the world is treating China the way China has been treating the world, and that's part of the problem. That's why we've got tariffs, because they haven't been playing fair. So now they've got an issue because they rely on the American market to the tune of about $200 to $300 billion in trade, and they've got someone in there who's just been voted in by the American people, who are going to, has put Trump tariffs on everything.
It's interesting, China would probably argue that America's been playing that game with them all along, where things are produced in China, sent over to America, just repackaged with a brand, Gucci, and then sold in America. So they'd probably be saying that what they're doing in Vietnam is very similar to what America's been doing with their manufactured products anyway.
Yeah, I'm not too sure. I mean, America's lost a lot of its manufacturing. Manufacturing globally now is in, the lion's share of it's in China. So they've lost.
So here's a headline. China not just reacting to tariffs, they're outmaneuvering them, as we've discussed, but it's not just a new trick. China used the same playbook back in Trump's first term with solar panels. So what's different now is the scale and the desperation. So China's trying to preserve 10 to 20 million export-related jobs. That's not just trade policy, that's domestic survival, isn't it?
Yeah, definitely. Definitely. The world is a strange place at the moment, and everyone's sort of now maneuvering to try and survive, I guess. Definitely, even with tariffs and things like that, there's plenty of examples of tariff being really, really bad, and we shouldn't go down that road. So there's plenty of debate on that for sure, and I guess in time we'll find out. But at the same time, the games that everyone's been playing, no one's really been sticking to the World Trade Organization rules to the letter of the law sort of thing. So now we've got these issues. And yes, if you look at China, China has got massive problems. It doesn't tend to tell anyone. It keeps it close to its chest, but their debt levels are quite high. They would have, depending on, I've read articles that China's debt to GDP figure is about 300%, which is greater than the Japanese one and far higher than America. So pound for pound, they've probably got more debt. They've also got a lot of people that got to feed, so they've got those issues. They've got local consumption is not quite there, so they're still relying heavily on manufacturing and export to earn any income. And then when they interfere with everyone's, economies, then that sort of, they get pushback on the manufacturing side, and they're relying on that manufacturing side. So that's not so good when you're carrying a lot of debt. Then on top of that, you've got 21% unemployment with youth between 18 to about 35 in China. So that's another big problem. They have 90 million unoccupied units with a shrinking population, massive issue. And they're not alone. America's got issues. We've got issues. Australia's got issues. So yeah, they're trying to survive like everyone is. The difference between the China and America for me is the politics. They tell everyone they're a communist country. They've embraced capitalism, but they behave like a regime. So that just sends out conflicting messages all over the place. And I guess some of the Western countries are the same. So everyone's now scrambling to try and survive with the limited amount of, trade in the world, and it's all slowing down and populations are shrinking.
And on the flip side, we don't know really where Trump stands, do we?
No, he's all over the place. Absolutely. That's why it's so volatile, because when people are confused and they've got no direction, and uncertainty around the world, that just creates immense amount of volatility. Great for traders, but for the rest of us, just scary.
Yeah. So markets clearly are rattled, plain and simple. The US 10-year spiked to 4.4%. Bond prices got dumped, and the so-called safety playbook got thrown out the window. Meanwhile, gold has exploded past 3,400 an ounce.
Yeah, if you look at the VIX index, or the VIX level, which is the index that highlights volatility, using the same dates, the 2nd of April, it was 21, or say 22. 7th of April, it was 45, so it doubled. Then by the 23rd of April, it was back down to 30. So that's an in-house look at, the market's perception of volatility. It's just, even that is volatile, the index itself. So, and that again comes on the back of all this uncertainty, and the media is just slamming everyone with, sound bites and, over amplifying, the downside and things like that. Just doesn't help. You've got, even in Australia, we've got a massive amount of debt, and we've got two politicians fighting over to get into power again and just spending more money. So all of that adds to, the uncertainty in the market.
And also get this, so US equity funds saw over 10 billion in outflows. Meanwhile, European and Asian equity funds are now flooded with capital. Investors are making a call here, aren't they? And it's not just a vote of confidence in US stability.
No, it goes back to the initial point I made earlier on, is that in these sort of environments, investors have got to avoid the risks. So they're scrambling. They don't really know where to put it. How do you know where to put it? Definitely gold's gone through the roof, because that's a protection. The Treasuries, I know the questions you keep throwing about the safety playbook on bonds, I don't think that's the case. I think bonds are still a safe haven for sure. But you don't want to buy a 10-year bond. If you look at the 10-year bonds in the States, last week. On the 2nd of April, they were 417. The 7th of April, they were 399. By the 23rd of April, they were 440. So you don't want to buy, in bond land, you don't want to be long and wrong. So you don't, the risk when you're scrambling and you're trying to reposition your investment book and put new strategies in place in this incredibly volatile environment, you don't want to be long and wrong. So you're not going to buy 10-year bonds, you're going to buy 2-year bonds or 3-year bonds and sit down that part of the curve and wait for the market to settle, then go out. So for me, it's still a safe haven. Treasuries are still a safe haven and will always be a safe haven until something else pops up that gives you, that is an alternative. And I can't see too many alternatives in the market. Yes, you can put money into the yen, the four big currencies: the pound, the euro, yen, and the US dollar. They're still safe havens. They're still the main currencies, regardless of Trump. There's still really nowhere else to put it. You can scramble a little bit, but you still got limited options.
As far as the trends of today, would you say this is a fair call? It's not about inflation or deflation, it's about trust. And right now, trust is flowing away from bonds and into the bricks of bullion, so to speak. So, what does this say about global volatility and what does it mean here in Australia?
Yeah, I think bonds are still there. I don't think people are not trusting bonds. They're just scrambling in a highly volatile environment. Um, so it's, and the world is still global. All those major currencies in the world are free and open, so you're exposed to what's going on around the world. So to me, the market is still trying to work. It's too early to know exactly where all this is going to go. Trump is still scatter. One day tariffs are he's multiplying them by 10. The next day he's dropping them, saying, "Oh, we'll ease back," and the people around him are sending different messages as well. Meanwhile, he's also scrambling the judiciary and the legal frameworks and things like that. So in that environment, if you're a fund manager, where do you put your money? You don't really want to go to China because they are the second biggest economy, and that's another pretty big point. You've got the two biggest economies, America and China, who are headbutting each other, and they've both got massive problems, and there's just an incredible amount of uncertainty in both those two economies. So how's anyone got any idea of where it's all going, and where do you put your money to protect yourself?
And this is also being reflected in the bond market. For instance,
Definitely.
we've got credit spreads widening, premiums creeping back in. So investors are no longer buying blindfolded. They're being very careful about, how they invest their money.
Yeah, well, yes and no. Definitely. For me, yes, you have to. And because this could go anywhere. And if we end up with inflation problems, then yields are going up, full stop. But there are people out there. We still have the full gambit of people who are very conservative all the way through to people who are prepared to take a risk. So you've got funds. Some funds will take extreme risk because they're looking for the big short sort of thing. They're looking for that big playoff that they can take advantage of. So it's still that adds to the volatility, really.
So in Australia, we've also got weak labour data. So 52,800 jobs were lost last print, which was a punch in the gut for us. So another soft number. Doesn't this mean the RBA has got to put away the deck chair and start steering the economy?
Yeah, I guess it depends on how you look at things. For me, if you look at it percentage wise, unemployment's gone from 4% to 4.1. That's hardly, a kick in the guts, I'd say. It's the Reserve Bank has got two objectives. It's got to look at it looks at unemployment and it looks at inflation. Unemployment has been pretty steady, really. Yes, we might have lost 52,000 this particular time around, and it's pushed the yield up a little bit. But overall, unemployment's pretty good. The economy's still probably bouncing along. You don't need to look, travel too far or look around to see what's going on. Just go to some of the popular spots where the restaurants are. Go to the international airport. Go to the tennis. Go to the, Taylor Swift concert, and you'll see that people out there spending a lot of money. So yes, there's probably some areas where people are doing it tough. Definitely, if you bought a house a little while ago and rates have gone up, you might be getting squeezed. Certainly, inflation is still chugging along because prices of things are going up, which is squeezing, a reasonable amount of people, but not everybody. So then you look at inflation. Inflation's gone from 2.8 to 2.4, but there are other figures that if you looked at, it's not going down at all. It's going sideways, if anything. So for me, those two things, the important one from the Reserve Bank's point of view is really inflation, because that'll sting everyone far more than a little bit. If unemployment goes to 4 to 4.5, bad for those people who lost their job. But as far as the economy goes, the thing that'll sting you the most is the inflation figure. So that's what they'd be more worried about. That's why they're being conservative. And I know some of the big end of town and the major banks are calling more rate cuts. But I tend to think there probably won't be. I just can't see it. Whilst there's threat of inflation and where inflation is at the moment, it's got to drop dramatically, I think.
So it's fair to say, would you agree, capital is becoming more cautious, more demanding, more global in its reaction, and Aussie bond managers are watching not just local data but global data?
Yes, definitely. I would say the market bit by bit is being dragged into being cautious because they can see what is happening around them. There are definitely some funds there that are ginormous, and it's very hard. It's like a big ocean liner to steer it away. So they've got to use derivatives or products on the side to try and restructure their asset allocations and things like that. So not everybody's seeing it as conservative. I must hear 2 to 3 people a day say they're about ready to buy in because the volatility, they see it as an opportunity. I tend to think they're a bit crazy yet. Just wait. This volatility and this uncertainty is not going to go away anytime soon. So yes, for my money, you've got to remain cautious. Capital, if you haven't been looking around the world and keeping an eye on all the trends globally in the last 20 years, then you're not doing your job properly. At the end of the day, we're a global village, and we have been, for the last 20 years, period. So it's incumbent on anybody, even individuals who are investing money, don't look at the glib liners that the media puts out. Have your own opinion on things. And if you're a conservative person, stick to your conservative approach, but keep an eye on things and don't just read, what's happening in America, because we're all interrelated. Have a look, not in Australia, I should say. Just don't look at our statistics. You have to look at what's going on around the world. And we're attached to what's going on around the world because we have $1 trillion worth of debt in this country at federal level. 40% of that is borrowed from overseas, and that's just at federal level. So if you don't look at what's going on around the world and interest rates in the states go up, and then all the offshore investors want their money back, then 400 billion is going to leave Australia and push the Aussie dollar down and push interest rates up dramatically. So you absolutely have to know what's going on around the world.
Okay, Al. So, time to wrap up this episode. So, what we've learnt this week, grey trade a la China isn't just fringe, it's now strategy. Havens, well, what we call traditional safe havens might have changed and it seems to have gone a bit rogue. Gold is not just shining, it's now glowing radioactive. And in Australia, we're holding steady, but it's starting to wobble.
Look, we in the scheme of things, Australia is quite small. Whilst 400 billion we've borrowed from overseas in Australian terms is ginormous, but in the world, when you look at America's, it's got $36 trillion worth of debt. So 400 billion is a drop in the ocean. So we will they don't even care about us. So we sit here and wait really, and get ready for some sort of reaction out of the market. So those four things that you've said, yeah, the grey strategy, that's just going to perpetuate the tariff problem. If you don't obey the rules and fit in and try and work with people and do the right thing, and you're doing sneaky things on the side, then that does nobody any good at all. Because sooner or later you get found out, and then everyone gets annoyed, and then you know tariffs are going to stay. So for me, safe havens are still safe havens. There's nothing that's popped up in my mind that is another safe haven. I know people are trying to convince themselves that Bitcoin's another safe haven, but there's no assets, there's nothing there. To me, Bitcoin is a Ponzi scheme more than anything. So the safe havens are still there. It's gold is still a safe haven. Government bonds are still a safe haven. Property's probably in within reason. So they're not going away. And I think you'll see in Australia, bit by bit, as we get dragged into it. It was in the paper today that our GDP is going to be affected this year by something like 20 billion, I think it was in the paper. And that's because not directly we've got tariffs on our steel and some other exports to America, courtesy of Trump. But then Trump's going to whack tariffs on China, which will then indirectly come back to us.
Okay, so here's our closing message. Stay nimble, stay informed, and remember, markets don't reward blind faith. They reward preparation. And in weeks like this, strategy beats hope every time.
Absolutely. We've said in this little room many, many, many times, and I've said it all through my working life, hope is not a strategy. You have to have a well-informed opinion, then stick to it, react to it, then monitor it if you think you've made a mistake, then adjust. Don't bury your head in the sand. Hope's not a strategy. You've got to continually manage your position and keep an eye on what's going on and adjust as you see fit. If you get it right, you can sit and wait.
Well, thanks for joining us on the Weekly Edge. And from all of us at Gilt, stay sharp, stay steady, and we'll catch you next week.
Thanks for tuning in to the Weekly Edge. At Gilt Investments, we're here to help you navigate the fixed income markets with clarity and confidence. As an Australian fixed income brokerage licensed to advise and deal in fixed income securities, our experienced team is ready to help you reach your investment objectives. We hope you enjoyed this week's Edge, and that it helped keep you in the loop and ahead of the curve. Until next time, stay sharp, stay focused, and we'll see you on the next episode of the Weekly Edge.